Okay, good morning again, everyone, and welcome to Saxo's weekly market outlook call, the Saxo Spotlight. I'm Charu Chanana. I'm a market strategist with Saxo in Singapore, and I'm joined today with my colleague Redmond Wong from Saxo's Hong Kong office. Redmond, I'm sure it's all eyes on China currently with the NPC policy meeting in progress, all those headlines coming out over the weekend as well. But let's just get to that in a few minutes. First, as we do mostly, I think we'd rather round off the last week and discuss what's happening in the big picture as well. So very broadly, first, we saw the U.S. equity markets rebound sharply in January, but the benchmark indices were down in the month of February, mostly as investors got worried about higher rates from the Federal Reserve than what was previously expected, and also the expectations that those rates could be kept elevated for a considerably longer period of time to fight inflation. This curve here, I'm sure you can see my slides. This curve is actually showing how the Fed expectations have shifted higher since the start of the year. The dotted yellow line, that is what the implied policy rate looked like on the 2nd of January 2023, so the first day of this year. Peak rate of about 5% and about 2 rate cuts were priced in for this year. But the bold green line, that one shows you where we are now. So the terminal rate projection is almost touching 5.5% in the Fed curve. And there are obviously reduced expectations of a rate cut this year as well. So this was broadly what we saw in February. But last week, I would say, was a little bit of a reversal again. We had equities running higher, dollar weaker, yields a little bit more stable. Because I think there is an expectation setting in now that most of that hawkish Fed turn is now priced in by the markets. Now yields are close to their peaks again, 2-year Treasury yields in close side of 5%. I think that gives a little bit of a comfort to equity markets that they won't run considerably higher from here as of now. So markets have potentially absorbed all the bad news that came out, or rather the good news on economic growth that came out from the US jobs report, as well as the bad news that came out from the inflation prints over the last month, CPI, PPI, PCE data, everything that showed that inflation is really a lot more sticky than what was being previously expected. But this broad rhetoric that I just mentioned about, all the hawkish expectations of the Fed being really priced into the markets will actually be put to test this week. The health of the US economy is potentially going to become a lot more clear with the release of the February jobs report this coming Friday. And investors will also be watching the testimony from Fed Chair Powell to the Senate and the House as well. So on that jobs report, remember, I think the whole turn of February was actually driven by the January jobs report, which was like a bumper 517K gains for the headline jobs. You can see the consensus expectations here on the slide for this month, basically still conveying that broad theme that the US economy stays pretty resilient at this moment. So the headline jobs are expected to still come in at over 200K kind of gains in February. But I would think that there could be some room for disappointment here because, when you get the super high number, the way we got it in January, there's always a scope for some correction in the following month. But a 200K is still pretty solid for US labor markets. The unemployment rate, that's expected to remain unchanged at 3.4%. Wage growth is projected to accelerate on a YOY basis at least. Most of the early indicators, such as the business surveys from the S&P and the ISM also, they've all pointed to an acceleration in hiring. So expectations for the NFP have remained robust as well. But like I said, that report actually comes out at the tail end of the week, Friday night for Asia. Before that, the show will really get started with Fed Chair Powell, who will testify before Congress on Tuesday and again on Wednesday. What's really important to watch there is markets usually react to the Q&A session of his first testimony, so Tuesday night, Asia hours. And the risk is that, again, given that the data, at least on the inflation front, as well as on the labor market front has remained a lot more robust, he could potentially strike a more hawkish tone. And what we've been hearing as well from the other Fed members over the course of the last few weeks is this. I think the broad consensus is forming that the March dot plot could shift higher. So terminal rate projections could be 5.5, maybe even closer to 6%. Let's see. And we're still more than 2 weeks away from the next Fed meeting, so we'll get into discussions on that later on. But overall, if Powell really strikes that hawkish tone that we've been hearing from the other Fed members, that could mean yields getting back above those critical levels again. That could mean dollar strength again, and that could mean equities could weaken again as well. But a lot of focus, like I said earlier, also on Chinese policy announcements. So let's jump to that with Redmond. Over to you, Redmond, for the news of the hour or the week or the weeks, as whatever you would like to call it.
Hi, thank you, Charu. Yeah, I mean, it's a lot of focus on the two sessions over last weekend, and that will continue. And the first thing on yesterday, on Sunday, is the government work report. I think the key thing is from that report is kind of rather modest, and also the focus is on stability. And the growth target for this year is set at around 5%. Going into this meeting, I think the expectation is between 5% to 5.5%. And the reason is because it's the weighted average of all the provincial numbers, 5.6. So last year, 5.5. So pretty much it's anchored around this 5 to 5.5. But now that I think the Chinese authorities chose to set it at 5. I think it's set a low bar. And there's some room for maybe chance for exceeding expectation rather than not meeting it the second year in a row, because it's last year the target is 5.5, and it came out actually the GDP growth for the whole year 2022 was only 3%. So, but having said that, I mean, that probably will be some investor may be a little bit disappointed about this slightly I would say in line, but at the lower end of the range number. So we need to watch that closely today, see whether any selling from that front. And another thing, potentially a little bit of the disappointments on the property market, and given the rhetoric of supporting, and also actually is quite a number of a lot of policies being rolled out in support of the housing market over the last 2 months. And in this work report, and the phase of housing is for living in, not for speculation. This phrase is back into the document and into the speech, and that has been omitted in the last couple of meetings in other important meetings from China. So that is our echo to some of those warnings from the PBOC last week about about not to create speculate, not to bring about speculations and so on. So basically is that might basically means that the support will be more on the supporting the demand from for household on housing, especially on affordable housing and long-term rental market, develop the long-term rental market, and also urban area renewal. And by the same time, the government seems to still mindful about those resurgence of speculative activities, especially in the Tier 1 city. And so that probably is a little bit disappointing for some investors. So these are the two key things. And the others is overall that is quite modest, and the tone on the private sector and also the internet sector has been rather positive. Is reiterate the support to private sector and also reiterate the support to the platform economy, i.e. those usually that is referring to those very large internet company among them. So that is a little and another thing is catch some investors' eye of is also the large increase, 7.2% increase in defense spending. That highlights some of the geopolitical tensions going on. And so so all in all, is a modest report, and it's not too much surprise. And also on the debt issuing quota for this year is, and also employment and target, and all those are pretty much in line with expectation. And the deficit set at 3% and larger than last year's 2.8. But if you but once you take into consideration of some of the transfer so on, is actually is smaller. So it's not too much difference. And one thing I would like to highlight and still emphasize a lot on infrastructure spending. So that 3.8 trillion of new local government special bond will pretty much also be earmarked for infrastructure spending. So so this year's probably consumption, technology, and also infrastructure will still be the focus, and in try to drive the economy. So I think one thing, and the meeting still continue. One of the key days, and I think the next focus will be the reshuffle of the personnel, and for the premier, that will be announced and decided and announced on Saturday. And for the vice premier and other ministerial level, personnel change will be announced on Sunday. So those are the probably will be closely watched by investors on how those top positions being reshuffled. And I think that's I think that would be the focus for China this week. And I'll pass it back to you, Charu.
Great, thank you, Redmond. So I think just jumping on to FX, so last week has been a week for the US dollar too, as mentioned earlier. And this week could potentially be quite volatile. Last week's biggest gainer, as you can see on this chart here, the offshore yuan, and that was primarily because of the outperformance of the Chinese PMIs and this whole expectation building in about Chinese policy stimulus as well going into the policy meetings over the weekend. And we also saw euro being boosted higher because of those higher inflation prints spurring calls for a tighter ECB policy as well. But this week, again, the story will really be reliant on where US yields go from here, because they're still quite close to their critical levels, having jumped higher at some point, but still right now being a little bit below those critical levels. So I think, again, the key driver will be Powell's tone, as I said, on Tuesday night, and the jobs report as well. In terms of specific currencies to watch, I think the Japanese yen would be particularly interesting because, again, it is highly yield sensitive, and that's what we are watching this week as well. But also we have the Bank of Japan meeting this week again on Friday, which will be the final meeting of the current governor, Kuroda. So there's a lot of news coming in about wage negotiations in Japan, and that labor unions are actually demanding for a record increase in wages, something of the sorts of, the highest in 25 years. So keep an eye on that, because remember that the Bank of Japan continues to say that it wants to see wage growth in Japan to be really convinced about whether they can achieve the 2% inflation target sustainably or not. So, of course, wage growth is a key input for the monetary policy in Japan. And this week, as I said, it will be the last Bank of Japan meeting for the current governor, Kuroda. Now, he is, of course, famous for giving surprises. So there's always a risk that, he could part with some sparks as well. But I think, again, the story here is that the incoming governor, Kazuo Ueda, we've heard from him on his testimonies to the parliament, and he has kind of signaled policy continuity as well. He has echoed Kuroda's views on inflation being externally driven and likely to come off soon. So not a lot can be expected. I think the baseline is still that they would stick with that ultra loose monetary policy. And in fact, Kuroda can sound overly dovish as well, trying to claim victory of his ultra loose monetary policy and saying that inflation's come back. But, you can see the inflation chart here on the slide. Inflation numbers are touching some record high levels in Japan. But, he could obviously, if he stays extremely dovish and says all of this is, all externally driven and is going to reverse, then that could again spell a lot of trouble for the Japanese yen, especially if US yields continue to run higher as well. Aussie dollar is also a key FX, currency to watch this week, with the support at 67 cents being really critical here. So we do have the meeting from the Reserve Bank of Australia as well, and a 25 basis points of rate hike is more or less priced in, not fully, but a big possibility. So Governor Lowy's tone will be really key. The sense is that he will continue to signal more rate hikes and not really take comfort from that cooling inflation yet. But still, I think the focus for Aussie dollar is way more on the China story right now and the headlines coming out of those policy meetings that are happening in China. Redmond, what are we watching on the earnings front?
Yeah, and on the earnings front, we have, I think it's a few things, and Monday we'll have a trip.com. I think that is that will give us some kind of ideas. Is because it's the reopening, and that is I think we think that is going to boost the tourism industry in China. And trip.com, of course, is I'm going to see what they say, how they actually have picked up. And then on Tuesday, the interesting will be on Crowdstrike, and in Saxo. At Saxo, we like the security, cyber security idea, and we actually have a cyber security theme basket in our on our platform. Investors who are interested in can check that out on our platform. And so Crowdstrike is one of those is a key company in this cybersecurity front, and that will be interesting to see the results and also what they say about the trend in the industry. And then on Wednesday, I think a focus probably is in Asia will be Cathay Pacific. That will be, of course, is a tourism film again, and globally there will be Adidas, and that is on the global consumption. And on Thursday, I think our focus will be on CATL and JD.com. And CATL is the lithium battery producer in China, and given the decline in the lithium price lately, and I think we want to see how their margin evolving and also the market share, and will also be something important to watch. And actually, Prada will be also interesting because it's the China reopening is not only beneficial to Chinese company, but actually, with Chinese tourists can now can go outside, and also the consumption, household consumption, also domestically also picking up. And Prada as a luxury brand, we would like to see how, their comments on actually in Saxo. We have published we have released a luxury good equity basket recently, and we are quite positive to luxury goods and in the inflation environment, and this is one of the industry that actually can maintain their profit margin while input costs are rising. And then lastly, on Friday, I think the focus probably will be on Oracle, and that gives us some more ideas about the state of the tech industry. And I pass it back to you, Charu.
Redmond. So yeah, let's just wrap it up here. I think this final slide here just summarizes everything that we discussed. Maybe just a brief mention on commodities as well, where crude oil is obviously remaining pretty balanced, the short-term outlook at least, and there's no clear driver that can shift the needle more one way or the other, in the way of bulls or bears. But overall, I think industrial metals will be key again this week, watching China headlines, but also the USD trajectory. But that's about it. I think Redmond mentioned a few key points as well to keep on your radar, going through the theme baskets that we have at Saxo. We have a few getting earnings results this week. Trip.com, which is a part of our APAC tourism basket, which is obviously a big focus with China tourists coming out. The cybersecurity basket remains quite interesting as well. We have the European luxury basket, China consumer and tech equity basket. So you can go in there and see if you need any inspiration, if you believe in any of these themes and want to take any inspiration as to which stocks may be interesting. So do take a look at that as well. And we will also be publishing a note on everything that we discussed today, the Saxo Spotlight, which will talk about everything to watch this week, and we'll also recording of this webinar, so do tune into that as well. And I think that's about it. Here are all the ways that you can access the Saxo research and trade inspiration, so on the Saxo platform or the website, or just follow us on LinkedIn and Twitter. And that's it from us then. Thank you very much for tuning in today, and we will see you again next week.
Okay, bye-bye.